Hello, successful and soon to be successful Ichimoku traders. Chris Capri here, secondsguysforex.com. So, as promised, I have a live trade for you on the dollar yen Ichimoku trade here. And so you can see I'm short at about 111.14. You can see it's live right here. Um, Current close is, or current price is at 104.60. So I am 650 pips at the moment, plus 650 at the moment, which you can see right there. Stop loss, initial stop loss is at 12, 112.18, and limit is at 101.15. And so what I'm going to do is I'm going to expand this chart and explain to you the Ichimoku reason why I got into this trade, what my methodology was for it using Ichimoku methods, why I placed my stop loss where I did, why I use my take profit, and so forth. So let's get into this. Okay, so zooming out here a bit, I wanted to talk about this one. So I mentioned in the monthly commentary that I had taken a short on this position and had used the Ichimoku to do this. And so I had been talking for months now that the wave structure was still intact. We kept still having or producing evolving N waves in favor of continued lower lows, A, B, C, D, A, B, C, D. Or I anticipated that we were going to break this and make a lower low. We just kept doing that. We kept making lower lows. We've been below the Kumo. And even though I talked about that we started to penetrate deeper, closer into it, and that we'd initially have a rejection off the Kumo, which we did. Oh, I have the 20 MA on this one here. Let me get rid of that for a second. Okay, so that's gone. So this one was actually straightforward in the sense that wave structure was still bearish. We hadn't broken below the Kumo. It's pretty rare that we stay below the Kumo for such a long period of time and that we break through the Kumo on the first time. And usually the Kumo will offer several layers of defense. And that could be in this case, the lower half of the Kumo, or it can be the other side of the Kumo. And so in this case, after we had a brief rejection off it and then penetrated into it, I felt like the sorry, just coughed there. I felt like the flat portion top of the Kumo here would offer resistance. And I also felt like we wouldn't penetrate above this here. We had yet to make a new series of higher highs and take out the prior C point and any of the prior N waves down. And so I felt like this C wave was going to hold. And so with that being said, and that we just kept producing evolving N waves, that I felt like the top portion of this Kumo was going to hold. So what I ended up doing is I ended up watching the price action intraday, and what I was basically looking for is that the market would close below the Kumo. And so once we pierced above it, I felt like, oh, well, maybe we will actually break out of this and maybe test this and then reject. But the market didn't. It went above the daily Kumo and then it closed below it. And the fact that it couldn't make a new high and that it would reject on a flat top of the Kumo here, everything was just pointing to me with the evolving wave structure, with the fact that the Chico at this time was running into the price line. All of these things to me suggested that the market was going to likely stop at the top of this Kumo. That either this portion of the Kumo or this portion of the Kumo was going to offer a barrier. And once this got broken, then I felt like this was the next defense. And then beyond this, this was the last defense, which would have been the C point. And then beyond that, we would have been in a very different structure, different wave structure, different five-line structure. Everything would have changed at that point. But we didn't have that. So I basically, on a close of this candle right here, I went short. And I put my stop above the Kumo, would have been the minimum that you would have want to place it here. If the top of the Kumo is going to reject it, and it's the reason why I'm getting in the trade, then that has to be the minimum reason why I'm getting out of it. So therefore the stop minimally has to be above that. But combining wave analysis into this here, I wanted to say, okay, well, I don't think the C point is going to be rejected. That was to me the point where my trade idea would be invalidated. That if the market could get above this C point right here, from this wave A, B, C, D, then that would tell me that I was wrong on my trade. And that would show I was wrong on two fronts. One, that the Kumo isn't going to hold it. Two, that the wave structure is also breaking down. Those two things would have been enough for me to say I'm no longer interested in being in this trade. So I literally got in on a close on this candle here and put the stop above the prior C point here. Give it a little bit of buffer, about an extra 30 pips, 30, 40 pips. And that was it. So literally about a 100-point stop. And right now we're up about 645. So about a 6R on this one here at this point. We did get a pretty solid bounce off the lows here. What we can see is that we have, and I think I talked about this in the monthly commentary, we have an expanding wave here. So an expanding wave means expanding volatility, and that usually is favorable for a move or a continuation with the trend. And so that's what we're seeing right now. We haven't touched the bottom of this here, so maybe we'll get towards that. I projected that to be about 101.15, and so that's what I'm looking for it to target. We may bounce a little bit, but if we do bounce, because of the fact that this has made a significant new low and it's been aggressive selling, I suspect that the Kumo is going to offer some resistance this time around. And I don't suspect it's going to get back up to the other top side of the Kumo. If it did, that would be fine because it's another flat top. It's 110. It's a big figure, and it could reject it, and that would still represent an evolving wave structure because this C point, if it stops here, will be lower this and be lower than this. So that is what I'm expecting right now. I am targeting a move to 101.15, which is 1100 pip or 1000 pip move. But I may consider taking profit and closing this one out pretty soon, based on the fact that if we look at how this has made new lows, so let's do this one now. A majority of the new lows haven't gone too far before they have retraced back. This was the biggest one, but then these two lows, we only made probably a couple hundred pips before we started to retrace back. And since we've done that here, then I'm expecting that that is a good possibility. So I'm going to be locking in some profit very, very soon, probably after this video. Maybe trail it above the Kijun at this point, or trail it above the Tenkan, depending upon how much I want to lock onto it. But a pretty big winner. I mean, I opened this at the end of May, and here we are 2.5 weeks later, and we're up well over 6R. This is the power of Ichimoku, is that when you do catch these wind trend trades, and you're able to find a very favorable wave structure and 5-line structure, you can often catch monster moves like this, and you don't need huge stops. You know, you can see the logic behind my stop of using the Kumo and the wave structure and the C point to kind of anchor my stop. All a very logical stop. So nothing magic here, no special sauce. You can see everything I'm doing here is things that I teach inside the course. And so with that being said, I hope you enjoyed this video. I look forward to your comments and questions on this one, and I will see you inside the course.